YouTube, it's Tom, back with another one for you. And so this one is a continuation of the affidavit of Walker Todd. This is a banker's affidavit of that was part of a case that took place apparently. So the case is referenced in the first video. That's where you're gonna find the case number and all that. So this is the last part of this here. So let's get right into this. So here it says that the plaintiff claims was the money lent to the defendant is not an unreasonable argument to state that plaintiff apparently changed the economic substance of the transaction from that contemplated in the credit application form, agreement notes, or other similar instruments that the defendants executed, thereby changing the cost and risk to the defendant. Now that's the biggest thing right here, is that, these people apparently claim to have lent you something of value, and when the only thing of value in this whole transaction was the fact that you decided to do business with a bankrupt corporation, which is a fucking bank essentially, right? Because they need people to make deposits to even have anything in general. Otherwise, they don't have anything, and they still don't. They don't lend you anything. So, really what's taking place is that you're signing a piece of paper that instantly becomes the value. But then, so they call that a promissory note. And that's you promising to pay them back XYZ from some shit that they claim to have lent you, that they could never prove they lent you if you ever questioned it at all. So, and if you do question it, right, you're going to send them a validation letter or a verification / validation letter. They can verify the fact that that obligation exists because you signed a piece of paper, but it's not valid. It's not valid. So, and that's due to the fact that you signed a piece of paper that became a promissory note that they sold off immediately for whatever else, for whatever they got for it. I mean, who fucking knows, right? So you sign a piece of paper, becomes a promissory note. That is the value. They sell that off. The one thing that they need to even legally send you a bill, to lawfully send you a bill, they need to be the holder in due course of that particular instrument, the original wet ink signed instrument. And absent that, all of the bills that they send you are fucking mail fraud, okay? So at most, the plaintiff extended its own credit, money of account, but the defendants were required to repay in money of exchange, and lawful money at that. So now they sent you, so they supposedly lent you some credit, right? Came from nowhere. You do a fucking forensic audit on that whole account, you're going to see that shit popped up in there as soon as you sign that piece of paper. That's where it came from. It came from your signature. That's what is the value here, okay? But they're going to need that in order to even have a claim on any of this shit at all. So if you ever end up in court with these dickheads, tell them that you want to see the wet ink signed instrument that they claim is the legally binding contract, of which states that you're obligated to pay them back at all, and then if at all, what the fuck is it? You know what I'm saying? So you're not gonna lend me fake credit numbers in a fucking computer and then expect me to go work my ass off to get green pieces of paper that are actually worthless pieces of paper that are just IOUs, and then you're gonna demand that as payment. Get the fuck out of here. How about that? So which creates at least the interference of inequality of obligations. Of course it does, because you're taking all the risk and they're getting all the reward. How does that work for somebody who's actually taking a benefit, which is them? So on the two sides of the transaction, the money, including lawful money, is to be exchanged for bank credit. Fucking ridiculous. So, and this is what they're doing to you people. But because you're letting them, okay? So they're not just outright doing it, you're fucking letting them because you don't know what the definitions are. Really, I mean, it's your fault. I mean, just as well as it is theirs. But they are operating fraudulently and knowingly at that, because you're not going to go to school and study banking and all that shit and then act like you don't know what the fuck you're doing when you're doing this shit to people. Of course you fucking know what you're doing. So modern authorities on money. To understand what occurred between plaintiff and defendants concerning the alleged loan or of money, or more accurately credit, is to help it is helpful to review a modern Federal Reserve description of a bank's lending process. So the Money in Banking 4th edition 1984 apparently introduced into this case. The commercial bank lending process is similar to that of a thrift in that it be a receipt of cash from depositors increases both its assets and its deposits liabilities, and that's because every book is going to have assets and liabilities. So, and one side of the book always has to reflect the other. So when you take on a bunch of debt, which is why they love hanging on to debt and making you think you got to pay for it, so they leave the debt lingering there, so that way it'll be a positive on their on the other side of their book, so they can lend shit out, because debt, the liabilities are actually assets as well, because the other side of the books have to freaking reflect it all. Now think about that when people are sending me all of their debts to discharge. That shit becomes a positive in my books, and I go ahead and collect that. Keep that in mind. And I know what the fuck they're doing because I do the same thing. So which enables it to make additional loans and investments, okay? So, I mean, you can, plus you can 10x whatever you get. You know what I'm saying? So keep that in mind too. So when a commercial bank makes a business loan, it accepts as an asset the borrower's debt obligation, the promise to repay. It creates a liability in its books in the form of a demand deposit in the amount of the loan. Now, also, whenever you make a deposit to these banks, you're lending them money. So you make a deposit and they have to pay it back to you. So you give them the deposit, it becomes a liability just as well because they do have to pay it back to you. They're just borrowing it, which also makes them liable for all the taxes as well because they're the ones holding it. So consumer loans are funded similarly. Therefore, the bank's original bookkeeping entry should show an increase in the amount of the asset credited on the asset side of its books and a corresponding increase equal to the value of the assets on the liability side of its books. That's what I was just saying because they do have to pay you back, so it is going to show up as a liability. So anytime that they supposedly lend you anything and it becomes a liability for you, it becomes an asset for them. But they do fail in the fact that they sell off that promissory note, basically relieving you of all your legal obligations at that point. So this would show that the bank received the customer's signed promise to repay as an asset, thus monetizing the customer's signature and creating on its book a liability in the form of a demand deposit or other demand liability of the bank. The bank then usually would hold this demand deposit in a transaction account on behalf of the customer. And I put that shit in escrow or something like that. And then so the mortgage should also end up in a trust in a REMIC, which it never ends up in, which doesn't even qualify the loan to even be a legally binding obligation for anybody because it's not fucking insured. It's not in the which everybody's finding out now, right? That's why nobody's getting their fucking money back for all these bank for all these bank debts getting fucking shut down. They're not fucking insured because they're not putting them properly into the REMIC. So the fucking investors are losing their money because they're not doing their due diligence and making sure that these banks are operating legally and lawfully. So when you do business with a crooked bank and they go down, you fucking lose your shit, bro. Real simple. Real simple. So demand deposit or other demand liability of the bank. The bank then usually would hold this demand deposit in a transaction account on behalf of the customer instead of the bank lending its money or other assets to the customer, as the customer reasonably might believe from the face of the note. The bank created funds for the customer's transaction account without the customer's permission, authorization, or knowledge, and delivered the credit on its own books, representing those funds to the customer, meanwhile alleging that the bank lent the customer money. If plaintiff's response to this line of argument is to the effect that it acknowledges that it lent credit or issued credit instead of money, one might refer to Thomas P. Fitch Barron's, and I'm assuming that this is a banking book here. And you guys really gotta really study banking in order to understand what these dickheads are really doing. And I mean, it's all within their, it's all within their power to do it, but they do skip a couple of crucial fucking elements here, big time. So, Business Guide Dictionary of Banking Terms: credit banking, 3, bookkeeping, entry representing a deposit of funds into an account. So, and so you ever do a forensic audit on these people, you're gonna want to see, and maybe they do lend you money, maybe they don't. I always assume they fucking don't because they probably fucking don't. So, I just fucking operate accordingly. And so what I do, so when people send me all their shit, I'm shutting them down and auditing these fucking assholes and making them liable for repayment times 2 as well. So they will be getting bills. So, but plaintiff's loan agreement apparently avoids claiming that the bank actually lent the defendants money. They apparently state in the agreements that the defendants are obligated to repay the plaintiff principal and interest on your own credit that you lent them, and they want some interest on that. I'm not interested. So I give myself credit because I should and I fucking deserve it. You don't got to go to these fucking people to get that. So valuable consideration, money, and the bank gave the customer, the borrower. The loan agreement and note apparently still delete any reference to the bank's receipt of actual cash value from the defendant and exchange of that receipt for actual cash value that the plaintiff banker returned. So, I mean, maybe it's not clear for you to see what's going on here, but it is for me. But these are crucial elements that I think everybody's missing, which are not allowing them to see the full picture here. So So according to the Federal Reserve Bank of New York, money is anything that has value that banks and people accept as money. Money does not have to be issued by the government. It actually can't be issued by the government because the people are the value. So who the fuck, how are they supposed to fund everything? They're fucking bankrupt just as well. So for example, David H. Friedman, I bet you thought. Apparently that's a book. So Federal Reserve Bank of New York, apparently introduced into this case, explains that the banks create new money by depositing IOUs, promissory notes, offset by bank liabilities called checking account balances. Money doesn't have to be intrinsically valuable or be issued by government or be in any special form. And that's the thing too. So you really want to get into the habit of, looking at money as things that are tangible, because otherwise it's a fiction of, fiction of your imagination, a figment of your imagination, if you will. And it's a fucking agreed upon construct. So, but when you get into the details of it, you're going to see that in fact these people didn't lend you shit, and they have no fucking authority to be demanding any certain species of currency in order to offset that liability, which doesn't even fucking exist either. So the publication of the Modern Money Mechanics, close to where I got the name for Magic Money Mechanics. I'm saying we in there with the 3M's. You already know what it is. So the Federal Reserve Bank of Chicago, apparently introduced into the case, contained standard bookkeeping entries demonstrated that money ordinarily is recorded as a bank asset, while a bank liability is evidence of money that a bank owes. So the bookkeeping entries tend to prove that the banks accept cash, checks, drafts, and promissory notes, credit agreements, assets as money deposited to create credit, or checkbook money that are bank liabilities, which show that, absent any right of set-off, bank owes money to person when it deposits money. And so that's what I was just saying. And so anytime you deposit money into these bank accounts, it is a liability because they do have to pay you back. They actually got to pay you back for that. So if you can figure out how to get that back, of course you can. I would call that a federal tax withheld and claim that shit and let the IRS go fucking bill them. So cash money of exchange is money, and credit or promissory notes, money of account, become money when banks deposit promissory notes with the intent of treating them like deposits of cash, which they do all the time. That's what I was telling you about, all the fucking fraud that these assholes do. When they're running short on money, they'll have their friends, create some fake bonds. They'll fucking deposit that, start lending it out, then find out it was fake, and then shut that account down. But what about all the money you fucking lent out based on that fake ass fucking deposit? What happens to that? You know what I'm saying? The fuck out of here. So commentary and summary of argument. Plaintiff apparently accepted the defendant's note and credit application, money of account, in exchange for its own credit, also money of account, and deposited that credit into an account with the defendant's name on the account, as well as apparently issuing its own credit for $95,905.16 to Michigan National Bank for the account of the defendants. One reasonably might argue that the plaintiff recorded a note or credit application as a loan, money of account, from the defendants to the plaintiff, and that the plaintiff then became the borrower of the equivalent of the amount of money from the, which is fucking crazy. Because in all reality, if you're giving them your social security number and signing anything, you're lending them fucking credit. Otherwise, why would they fucking need your social security number if they were the ones giving you anything? Get the fuck out of here with that dumb shit. So the plaintiff, in fact, never lent any of its own pre-existing money, credit, or assets as consideration to purchase the note or credit agreement from the defendants. You know what I'm saying? And so there is no consideration of equal value. These motherfuckers really just stole your credit is what just happened. So I add that when the bank does the fraud, so I call that shit a bunch of things. Identity fraud, mail fraud. We could go on and on. Maybe I'll make a list later for you guys if you want to go press charges on them. So I add that when the bank does the foregoing, then in that event, there is an utter failure of consideration for the loan contract. When the plaintiff deposited the defendant's $400,000 of newly issued credit into an account, the plaintiff created $360,000 to $400,000 of new money, the nominal principal amount less up to 10% of $40,000 of reserves that the Federal Reserve would require against a demand deposit of this size. Essentially saying that if you were to deposit, you would have only had to deposit $40,000 worth of a tangible asset in order to get $400,000 worth of credit, because you can 10x anything that you deposit. So of reserves that the Federal Reserve would require against a demand deposit of this size. The plaintiff received $400,000 of credit or money of account from the defendants as an asset, GAAP, generally accepted accounting practices, ordinarily would require that the plaintiff record a liability account, creating the defendant's deposit account, showing that the plaintiff owes $400,000 of money to the defendants, just as if the defendant were to deposit cash or a payroll check into their account. So that's actually what they're supposed to be showing in their books, is the fact that you did in fact make a deposit of 400,000, which would essentially grant you credit for 4 million. Should be, right? So, but they're the ones getting that, and they're the ones lending out the 4 million, and they're making all the money on that. Meanwhile, you're getting stuck with the fucking bill for the shit that they do. Okay, so when you pay your mortgage and shit, essentially what you're doing is paying the taxes for all the investments that they're making with your money, and you're not getting shit from that. Congratulations, you just got fucked. You know what I'm saying? So the following appears to be a disputed fact in this case, about which I have insufficient information on which to form a conclusion. I infer that it is alleged that the plaintiff refused to lend the plaintiff's own money or assets and recorded a $400,000 loan from the defendant to the plaintiff, which arguably was a $400,000 deposit of money of account to the defendants. And then when the plaintiff repaid the defendants by paying its own credit of money of account in the amount of $400,000 to third-party sellers of goods and services for the account of the defendants were repaid their loan to plaintiff, and the transaction was complete. So I do not have sufficient knowledge of the facts in this case to form a conclusion on the following disputed points. None of the following material facts are disclosed in the credit application or note, or were advertised by the plaintiff to prove. And so, of course, they're not going to put these particular aspects of the transaction into anything that anybody could see, because then you wouldn't fucking be doing business with them, would you? You know what I'm saying? I mean, I fucking sure as hell wouldn't. That shit don't benefit me at all. Why the fuck would I do business with them? So defendants are the true lenders, and the plaintiff is the true borrower. And so this is what I do as well when I do my paperwork. You know, I'm setting them up as the borrower and you as the lender, and I'm also making them liable for repayment ×2 for being little bitches. You know what I'm saying? And I'm also getting them audited as well. So any banks that I'm doing these shits on, you better you better fucking expect them bills and shit. So the plaintiff is trying to use the credit application form or the note to persuade and deceive the defendants into believing that the opposite occurred, and that the defendants were the borrower and not the lender. The following point is undisputed. The defendant's loan of their credit to the plaintiff, when issued and paid from their deposit or credit account at plaintiff, became money in the Federal Reserve System, subject to a reduction of up to 10% for the reserve requirements, as the newly issued credit was paid pursuant to the written orders, including checks and wire transfers to sellers of goods and the services for the account of the defendants. So, you know, they're making a pretty good note here, making it a fact that they are in fact committing fraud here. And so this is what they do, and they'll go ahead and put it out in the public, and then they'll fucking bury the shit. So, based on the foregoing, plaintiff is using the defendant's note for its own purposes, and it remains to be proven whether plaintiff has incurred any financial loss or actual damages. I do not have sufficient information to form a conclusion on this point. In any case, the inclusion of lawful money language in the repayment clause of the note is confusing at best, and in fact may be misleading in the context described above, which is fucking crazy, because how are you going to lend me supposed money, which you don't, because it's just numbers in a computer, and then demand that I go and perform to come up with the rest of this fucking money that you claim that I owe, that I don't owe, that you actually owe. That's fucking crazy. So this is part of the affidavit. I hereby affirm that I prepared and have read this affidavit, and that I believe the foregoing statements in this affidavit to be true. I hereby further affirm that the basis of these beliefs is either my own direct knowledge of the legal principles and historical facts involved, and with respect to which I hold myself out as an expert, or statements made or documents provided to me by third parties whose veracity I reasonably assumed. Further, the affiant saith not. So, I mean, this dude put his life on the line and his freedom on the line, because he swore under the penalty here, you know, as to the facts of the case here, and you know, as to the level of his expertise, which I agree with just about everything that was said in this whole document here. And I, you know, I'd be fucking, you know, anybody I think on the opposite side would be hard pressed to prove otherwise. So I'd like to see it if somebody has an argument to the contrary of any of this. You're not gonna fucking have one. So, you know, it is a game of chess. Stop playing checkers with these clowns. That's what I got for you for now. Until we meet again.